Hey, Brian Steer Group Real Estate Team here at the Southern New Jersey Shore. I'm with Doug Miller of Aspire Home Mortgage in North Wildwood, and this is going to be the first episode of our new web series, our monthly Mortgage Minute, where we're going to dive into all kinds of information about types of loans, credit, almost anything you think of that has to do with the mortgage business. So Doug, why don't you go ahead and tell us a little bit about yourself and how long you've been in the business, and then we'll get rolling from there.
Thanks, Brian. My name is Doug Miller. I work for Aspire Home Mortgage Incorporated. Our offices are located in North Wildwood, New Jersey. I'm a resident here in North Wildwood, New Jersey. And I've been doing mortgages for going on 25 years now. So I like to think that I have the experience to help answer most of your questions today.
Fantastic. All right, well, let's jump right into it. We're going to start today with very, very simple stuff, and that's going to be, where do I start? You know, for someone that has never had a mortgage or hasn't had one in a long time, where do they start the process? What's the best thing you do first?
Well, the first thing I think most consumers need to do is get pre-qualified. There are a lot of really positive things and advantages that they can get from that. Most people have no real clue or real grasp of what the payments are going to be and where their price point wants to be. Getting pre-qualified will outline for them what their max loan amount can be, what their prospective payments will be on the loan when they get into the home, what their interest rate is going to be, and what their closing costs and down payment requirements are going to be. And with all that useful information, I think it helps them, guides them to go back with you, the realtor, to go find a property that fits their needs.
Yeah, and it does help big time on our end too, on the real estate end, because when you do come with that pre-qualification and you go to make an offer, it makes your offer that much stronger, because the seller is aware that you've gone ahead and taken the steps already to get that process started, and someone's already looked over your information and said, hey, they're looking solid for this loan. So that's a great thing to do. I think after that, just be curious about what are the couple most commonly asked questions that you get from people during that pre-qualification process.
Well, I would think the biggest question is how does my credit score affect my program and interest rate, and obviously credit score has a lot to do with where you end up with the interest rate. Depending on which type of loan product you're going for, whether it's a government loan or conventional loan or a second loan, the credit score affects it in various different ways. But as a simple rule of thumb, the lower your score is, the more adverse of an effect it's going to have on your interest rate. It's going to make your rate be a little bit higher.
Gotcha. Okay, and any other commonly asked questions that you get with the pre-qualification process that we can cover today?
We get lots of questions. A common one I get all the time, and this is just, I think it's human nature, is someone will call me and they'll say that I've recently switched jobs. How long do I have to be at my new job to get a loan? A lot of people out there think that you need to be at your job for like 2 years to get a mortgage. It's not true. As long as you really haven't had a gap in employment, you can go from job to job to job, and we'll be able to use that new income in order to qualify you for a new loan.
Great, cool. And what about if someone, I know I come across a lot of people that ask me this question and I have to refer them to you. What if someone has a bunch of cash that they want to use, they're hiding cash under their mattress, and they want to use that towards a down payment or a loan? How do they go about that?
Well, that's a great question, Brian. My advice to everyone that has got a lot of cash on the side or not in the banking system right now, and they want to use that money for a mortgage transaction, would be to go and get that money in the bank. We have to be able to document all the funds that come in or out of these transactions, and we're going to be checking your bank statements for a 60-day time frame prior to the conclusion of your mortgage or until the purchase. And if you see a large deposit of money going in, they're going to ask where that money came from, and if you say it's cash, you can't use it. So my advice would be to get that money and put it into the system as soon as you can, and that way we can use it and document it properly. Cool.
Awesome. I feel like this has been super informative for people. And we are going to do this every month. So like I said, stay tuned for next month's episode. Due to the season and where our major market is down here at the Southern Jersey Shore, we're going to cover second home loans and investment properties. So we hope to see you then. And thanks for taking the time to watch, and we'll see you on the next one.